Welcome back to the Humble Market Timer YouTube channel. Once again, if you enjoy the content, please like, comment, and subscribe. In today's video, I want to talk about gold. Can we reach 5K before Christmas? Before I go any further, please check the description for my disclaimer. Once again, these are my sole ideas, not investment advice. Now, gold has been on fire, but it's sort of been consolidating after a nice push in around that October time frame. It sort of had a bit of a breather and pulled back some, but it's really been grinding to a point where the chart is really setting up for a nice bullish push higher. And so my question is, can we get that big push in gold to 5,000 really before the end of the year? Now, I think it's possible, but I'm not necessarily sure if it's probable. And we're going to kind of look at the technicals to see, first of all, how we get to that 5,000 and if it makes sense that we can possibly get there in the next 2 weeks. So here is sort of a daily view of gold over, I think this is pretty much maybe about a year time frame. And you can see we had this big, nice push here, and then we had a nice pullback, but we sort of been consolidating here. And as you can kind of tell, we sort of had formed a really nice set of bullish consolidation right here. And we're really starting to form what many people would call a bull flag, when you have a nice push up and then you have consolidation generally in that near the highs. Anytime you see that sort of action, that's always looked at as being bullish consolidation if it consolidates near those highs. So just kind of looking at this again, look at more of a broader angle of gold. If you look, let's kind of scan out to the monthly view. And I've shown this chart in many of my other videos where I showed how this is sort of the long-term view of gold and how gold sort of traded in this tight range, sort of right in this area for a long period of time, and then it broke out. And it traded in this parallel for quite a bit of time before it fell out of the parallel. It dropped out of the parallel, consolidated a bit, and then it went on this massive tear in the last 2 to 3 years. And if you notice, we had a stop right underneath where this initial push from the price action within this parallel. Notice we stopped just below where this parallel connects to that initial move. So that's sort of looking at gold from a broad standpoint. And so now kind of looking at it from more of a narrowed down point of view. So adjust this a little bit. And first, let's first look and see if that 2 week time frame to get a big push to 5,000, if we have some previous price action that would show us that we could possibly get there in a short period of time. So let's just say, if you notice at the top of this parallel, it represents right at about $5,000 for gold. So let's just draw a line from the top of the parallel to where we are currently. So let's draw it to about right here. So we have this line represents the distance that we have to move to get to that $5,000 price point. So let's kind of move this to see if we've made that move in the past from that distance where we got that much movement in the price action, to see how long it took us to make that move. So if we did a bit of a count here, if we kind of line this up to about right here, if you count candles, this is a daily chart. I'm counting 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, about 15 candles it took for gold's price action to move this distance. So that would require approximately 3 weeks if we were to move in price action as we have moved in the past in order to get to 5,000. So Christmas is within about 2 weeks. We've had that price action move in about 3 weeks. Not that far off. So again, seems like it's possible, but it might not be probable. So let's look at a few other things. Again, looking at this price action, let's sort of break down to see. Actually, before we do that, I want you to think about one thing. Normally, when there are massive moves in the overall markets or stocks that generally get massive pushes, generally it occurs in December. And part of the reason for that is if a stock sees momentum, a lot of times your big institutional players will try to jump in and even push harder something that's got momentum at the very end of the year, because not only is it end of the year, it's end of quarter. All these big institutions want to make their books look good. So if there's a way that they can kind of inflate those end of quarter, end of year numbers by pushing something, big institutions will do that. So what you often see is that when stocks tend to have, not all the time, but oftentimes if you were to pick a month in which a stock or a commodity tends to make its biggest move, it tends to happen in December. And it's a lot of the reason for that is, again, because those institutions like to push money into those hot stocks or hot commodities so they can really make their books look good at the end of the year. And we've seen that in other things. If you look here, this is a chart of Bitcoin. This massive push here in Bitcoin from this area here to this area here, it was a massive move. It occurred in December. So, and you see this often in crypto, in Bitcoin, but it's not just in crypto. You see it in other companies, particularly if they have a lot of positive momentum heading into the end of the year. So keep in mind that just because we haven't had that big price action yet, or we haven't had a big move that we would need to go to 5,000, it took us 3 weeks in the past, that doesn't mean that we couldn't get there in an even quicker time frame because we are in the month of December. So keep that in mind so that it's possible, but I wouldn't necessarily say it's probable. So let's kind of go back to the gold chart and let's kind of point out what needs to be done for gold to get to 5,000. First thing I want to show you is, let me delete this line right here. This action that we're seeing here is giving us a bit of a cup and handle action. And I'm going to kind of draw this out so you can kind of see it. If you notice, this is the action. So we have the cup. Now I know you see it kind of went in here, but it kind of retraced and then made another push. When you see that action, it sort of acts as just a part of the bottom outline of the cup, the outline of the cup. So really you can sort of ignore this action in here. The main action is this action right here, which is a clear cup and handle formation. And so when you have that formation, you can take generally a line from here to about here, and this is sort of acts as the neckline. And as you can see, the move that we made in gold today, after this nice consolidation, this bullish consolidation right here, you can see that we are now piercing the neckline of gold. If we get followed through tomorrow, gold, I believe, will be off to the races. But just looking at a measured move, you take the neckline to the deepest part of the bottom of the cup and you measure that out. I'll straighten this a little bit. You measure that out from the breakout point, and that tells you approximately the measured move if you get a break of this neckline for the cup and handle formation. So first thing you're probably going to get to is this line right here, which will represent sort of a double top for gold. Now, there will be lots of resistance there because there are always shorts lurking when you get and you retrace to a double top in any sort of commodity or stock. Shorts are always there waiting for that. But if the move is powerful enough, you can push through the double top. So first thing you need to be on the lookout is for the double top, which would kind of start to give you somewhat of an M formation, but more importantly, the double top that will occur right around that $4,400 area. So that would be probably your first area for resistance. If we continue to push past this neckline, your next level would be, in my opinion, the measured move from the break of the cup and handle formation, which would be to the middle of that parallel that I drew that extended all the way down to when gold first made its initial breakout out of a long consolidation pattern. So that puts us at about 4,600. That would be the next area where I think we would see some resistance. But I believe at that point, if we got that sort of momentum and we were to push to the 4,600, there would be massive momentum and buying power to try to push this thing to 5,000. I can almost guarantee it. There would be just the piranhas would be circling and everybody would be pushing their money in to push gold higher. And I do believe the squeeze that would occur based on the shorts that will pile in from this double top here, maybe additional shorts that pile in, and once we get to the midpoint line here at 46, all those factors would continue to squeeze gold potentially to the very top of this parallel, which would be 5,000. And I do believe it could occur before the end of the year and possibly by Christmas. So be on the lookout for the price action in gold. You can see we're starting to break that neckline. If we get followed through tomorrow, your next target will be the double top at 44. After that, you have to look at the measured move that will take us all the way to 46, which would be in the inside, that long trending parallel. And then if we get to that area, it's just a matter of money just pouring in, Momo, and just everything just pushing gold up to that 5,000 point. Oftentimes, those price targets become magnets for those nice round numbers, and 5,000 would be a very nice round number for gold. So we'll see if gold can get to that 5,000 price point by Christmas, by the end of the year. I do believe it's possible, but it may not necessarily be probable. Hope you like the content. If you like it, please like, comment, and subscribe. Thanks for watching.